Good afternoon, everyone. I hope everyone's doing well. Today, I wanted to follow up to the business cycle. So, last time we talked about the business cycle, which was using macroeconomics. Today, I want to talk about the market cycle, which is using the actual performance of the market to help us determine what a market cycle is. The market cycle has 4 phases. The first being accumulation. Now, accumulation happens after a bottoming of the market, the beginning of an uptrend. Now, after accumulation, where buyers have taken over sellers, you have what's called a markup phase. And that's where the market has been stable, it's been gradually moving up, and it just kind of pushes up a little bit further. Well, then you have distribution. And that's kind of like when the business phase, you had a peak and then recession. Think of distribution as the same point as the peak in that diagram where sellers are beginning to take over buyers. And that's where, you're in the beginning of a downtrend. And then lastly is the downtrend. That's where the market is continually moving down and trending downwards. Now, after that, at the bottom of the market, you begin to have accumulation again. So once you go from accumulation to markup to distribution to downtrend and you go back into accumulation, that has now completed one market cycle. Now, the difference is between the business cycle and the market cycle is depending on the time frame that you're looking at, a market cycle can last anywhere from a few minutes to a few years. Now, why have I talked about the business cycle and the market cycle? The reason is, just like doing a top-down approach in your investment strategy, I'm trying to help you see the benefits of getting a much broader view of how things look before you dive in and start looking at technical analysis or just picking a stock based off fundamental analysis and saying you should go in. You need to know, where are we in the business cycle? Where are we in the market cycle of the time frame that I'm looking at? So I hope you found this helpful, because there are strategies that can work in different markets. And as I've mentioned before in the video I put together titled, What's Your Financial Advisor Telling You? There are different strategies than just long only asset allocation. And as these markets have shown us, having multiple strategies might be beneficial. So I hope you found this helpful. If you have any questions, don't hesitate to comment below or reach out to me directly. Talk to you soon.